and welcome to another episode of my weekend market analysis series. As we gear up for the upcoming trading week, we will be including the GBPUSD to our list of instruments to watch closely. In this video, we will be diving deep into both fundamental and price action analysis to gauge the current market sentiment. Make sure to stick around for the entire analysis. Every single details matters when we are trying to understand the behavior of investors, especially in the GBP USD market. Over the past 5 weeks, the British pound has been under pressure and it is currently trading at its lowest point in this period due to a cautious market mood. In fact, last week the pair traded within a tight range, a range bound structure, as investors closely monitored the Federal Reserve stance on interest rate cut for their September meeting. With all eyes shifting to the next week's CPI's inflation data releases from both the United Kingdom and the United States, the key question is whether the British pound can regain its bullish momentum in the coming week. To answer that question, we will be taking a closer look into the charts, analyzing the market's current behavior by identifying key technical factors that could influence trading activities in the coming week. These include a look at major trends, support and resistance levels, and structural patterns that can help us anticipate price movement. But before we begin, please note that this presentation is purely for educational purposes and should not be considered as financial advice. Forex trading is risky, so always do your own research and consult with a qualified financial advisor before making any investment decisions. With that said, let's dive right into the business. So, our first point of contact for this week is going to be on the daily time frame, where we do want to have an holistic perspective into what is going on prior to last week's trading session. And to do this, I'm going to be taking into account the character of price action in the last 4 weeks. I'm looking at the month of April till the present moment. And if you do that appropriately, you would notice that the current market dynamic remains bullish at this point. And after connecting the series of higher lows here, you can see I have a couple of ascending trend lines that will be guiding our trading decisions next week. And as long as price remains above our ascending trend line, we obviously want to be looking out for patterns and structures that support the idea of buying. Now, besides the ascending trend line, it is a fact that the market has found a robust demand zone between the 1.261 and the 1.265 since the mid-month of May. If we take a closer look at the structure, you will see that every attempt by sellers to drop below the structure has always been met with strong resistance from the buyers. And in fact, in the last 5 weeks, despite that strong bearish momentum, we saw that as soon as price came close into that demand zone, we begin to notice buy pressure resume again from that particular area. Now, the question here is, will price be respecting this ascending trend line one more time to continue that uptrend scenario that started about 4 months ago? Or will price action break down both trend line, breaking down that demand zone to incite a sell-off? Well, to guide our decisions around this confluence, we are going to be having our key level at that psychological area around the 1.275 0 area. And of course, you can see in the last 5 months, this area has played a significant role in determining the direction of price action. At some point, it was a demand zone, and at some point, it was a selling niche. And now that price is back into that key level, we want to see how the market is going to be reacting to the structure to determine whether we are going to be buying or not. Now, to navigate this important confluence, I have a simple structure on the 4 hours time frame which we will be using to guide our trading decisions. But before we scale down into the 4 hours time frame, it's time to pay attention to upcoming economic events that will influence market sentiment next week. And of course, by checking the economic calendar, we can identify how upcoming events might affect price action. This helps us spot potential correlations between key economic releases and specific technical patterns on the chart, allowing us to time our positioning more effectively. Now, looking at the economic calendar here, and based on the asset we are going to be that we are monitoring, we will be focusing on high impactful event from both the United States and the United Kingdom economic docket. Now, the first impactful event for the week is coming in on Tuesday, August 13th, and that is from the United Kingdom. In fact, we have three events going to be running simultaneously. We have the claimant count change, which refers to the net change in the number of individuals claiming unemployment related benefits over the last 30 days. We also have the employment change data, which is reported monthly, and it refers to the net change in the number of employed individuals. Then on that same time, we have the ILO unemployment rate, that is the International Labour Organization unemployment rate, which provides us with a comprehensive measures of unemployment encompassing individuals actively seeking employment and those available for work but not actively seeking. So these three data here are more or less labor oriented data, which will be giving us an insight into how well the labor sector of the United Kingdom is doing. Then, if we fast forward to the second day, that is Wednesday, we have economic features from the United States, and on the list is the producer. Sorry, on that same day, sorry, we have the producer price index, which is measures the average change over time in the selling prices received by domestic producers, excluding volatile foods and energy sector. Then on Wednesday, we're going to be looking at inflationary data, which is the consumer price index from both economies. It's a very important day, which could bring some high level of volatility in this market. And for those who do not know, the CPI data is a measure that examines the average change in prices paid by consumers for goods and services in the last 30 days. And it is expected that a higher than expected CPI data can lead to concerns about inflation, hereby impacting market sentiments as it may prompt expectations of tighter monetary policy to control rising prices. Now, fast forward to Thursday, August 15th, we will be looking at another important event from the United Kingdom, which is the gross domestic product for quarter two. This is expressed in annual growth rate, and in fact, it measures the total value of goods and services produced in the United Kingdom during the second quarter. Then, on that same day again, we are going to be looking at the retail sales data, another important event that measures the total receipt of retail stores representing consumer spending, and it will definitely provide us insight into the health of the economy and consumer confidence, influencing expectations about um, future economic growth. And the retail sales data will also be seen from the United Kingdom on Friday. And finally, in the week, we are going to be looking at the publication from the University of Michigan, that is the Consumer Sentiment Index, which gauges the prevailing sentiment and confidence levels among consumers, hereby providing the market with insight into potential shifts in economic conditions. So these are the high impactful events that we will be looking forward to next week. And of course, the anticipation of this event has a way of influencing sentiment in the market, which will reflect on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame. Now, on the 4 hours time frame, I have a very simple trading setup that will be guiding our trading decisions. While the next trigger for the US dollar will be the United States Consumer Price Index data, which will be published on Wednesday, the pound sterling will be influenced by the United Kingdom employment data for 3 months and the consumer inflation data for July, which will be published on Tuesday and Wednesday, respectively. Now, how will this market anticipate this event? Do we have any structure that we can use to strategically position our next move? Well, yes, we have something that we're going to be looking at. So what I did here on the 4 hours time frame was to acknowledge the character of price action in the last 5 weeks, and of course you will see it is quite clear the market has been bearish, and along the way it has transitioned into a descending channel, as you will see here. Connecting the series of lower highs, we have the resistance line, and connecting the series of lower lows, we have the support line of that descending channel. And throughout the last 5 weeks, the market has uniformly, consistently remained within this range bound structure, which further emphasized that sellers are still very strong in this market. Now, what are the chances that the pound sterling have for next week? Well, let's zoom into the current structure. And while zooming into the current structure, I'm beginning to see something interesting evolve on this chart. Now, if we look at what happened through the course of last week, we saw this impulsive bearish leg bringing price into its lowest point in the last five weeks and giving us a reversal setup in the form of a double bottom structure. And with a reversal setup identified here, the next thing we do is mark out the neckline of that reversal pattern, and we have something around the 1.272. And in fact, you will see the market has broken out of that structure. And in fact, since the breakout happened on Thursday, the market has been confined within a range bound structure between the 1.2773 and the 1.27270 to emphasize the prevailing uncertainty at this point. Now, this indecision we're seeing here interestingly shares a confluence with the resistant line of that descending channel. So you can see that we are at a crucial juncture at this point in time where, depending on how market reacts to this confluence here, is going to be determining if we are going to be buying or selling. Now, one of the things I'm looking at here is whether or not the price will break out of this resistant line for the first time, which shares a confluence with this resistant line of that range bound structure to incite more buying opportunity, or will price action respect the resistant line here to incite a sell-off as buyers find it difficult to break through the structure, maybe breaking it back down into the neckline in an attempt to continue the uptrend, or dropping as far back into the support line of that descending channel. So this is where our center of focus is going to be for the early hours of the new week. Trust me, I will be with you in the comment section of this video to give us an update on what I think will happen after monitoring how market participants will be reacting to this important confluence around the key level at the 1.275 and of course the resistant line of the descending channel we have identified. So I will hope to see you in the comment section on Monday morning. If you have found this video useful for your independent trading decisions, I'll be glad if you could hit the thumbs up button. Your support not only means a lot to me, but also helps the video reach more traders who might benefit from this content. Thank you in advance for doing so. If you haven't already, make sure to subscribe to the channel for more insights and updates. By subscribing, you will always stay informed about my latest videos and commentaries. You will be the first to know when new contents drop. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.